Mode.
Good evening everyone and welcome to Admiral Markets webinar. We had some technical difficulties. I hope that is solved now, so if you experience any problem with these connections, please restart and sign in again. Now I think that everything is fine, so we can start the webinar. So today we will go through Heiken Ashi price action strategy. And please be very patient and please be very, very focused on what I will speak, because this is price action strategy with using Heiken Ashi, so it needs really your attention. Before I begin, as always, our standard is disclaimer. Online educational materials are developed by Admiral Markets as Estonia for a global audience. Therefore, please take into consideration that information in this session may not be suitable for everyone. To get a corresponding information on charting conditions and any other detail, please visit www.admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. Risk disclosure statement stating all possible risks associated with Forex market. By accepting the risk, you're also proceeding further with me. Admiral Markets UK Ltd takes no responsibility for information accuracy. The analysis represents the personal opinion of the author, it's me, and in no way it represents the actual suggestion for the trade. These are not MUK's opinions, and the website in the video is not the .co.uk website, but the globalnews.com website. Forex is risky business, and this is a personal opinion only. This webinar is for informational and educational purposes only. Okay, so guys, with having said that, we are ready to proceed. Admiral Markets bonus campaign has almost finished, so you have one more day to go with new account. You can get up to 50% bonus on deposit. For new account, 0.25 loss should be made, and you have 180 days to complete the bonus. This is the link, so by clicking the link you will get to the page. Okay, so Heiken Ashi introduction, Heiken Ashi benefits, and Heiken Ashi price action strategy. So before we begin with the actual webinar, I hope that you made some money from dollar-yen analysis today. Basically, we had good setup, which I posted on Admiral Markets website. It was a good analysis, and basically what happened, the price was rejected, and subsequently it got us to 30-40 pips. And definitely that is the benefit of using really price and price action. So hope that you made money on dollar-yen. Some 50 pips maximum was for today, because my analysis showed 118.80 to 90, and the price went to 119.30 subsequently. Okay, so now we are ready to proceed. What is Heiken Ashi? Basically, Heiken Ashi is a term which I personally use to say Heiken Ashi candlesticks. So for me, in my opinion, those are candlesticks. But I need to say, guys, those are good candlesticks. Pretty much they are very, very accurate. They have a lot of really advantages if you know how to use it. They can show you the range perfectly. They can show you the momentum also. And actually, I really found it pretty much accurate. I have tested it a lot, and there are really good price action tools if you don't want to mess up with standard Japanese candlesticks. Heiken Ashi are also Japanese, but those are not standard candlesticks. Those are basically modified, and it means average pace. Heiken means average and Ashi means pace. It represents the average pace of prices. Okay, these candlesticks can be used to identify trending periods, potential reversal points, and classic technical analysis patterns. The technique is definitely different than using traditional candlesticks, because traditional candlesticks do not take into account momentum and those colors, which I will show you. All of Heiken Ashi candlesticks are color coded, guys. So basically you won't be seeing any traditional candlesticks on the chart. Okay, Heiken Ashi modifies traditional Japanese candlesticks by sending the open and close through a calculation of the average. Now, guys, this is serious price action method, so just pay attention. This is our first class for Heiken Ashi candlesticks. We will also have, not in the next month, because I will leave you to practice it the whole month if you want. Then after, in the month of June, we will be going through another Heiken Ashi. It's the same method, but we will be using other price action principles. It's better to say additional price action principles. So for all of you who are listening now to the webinar, this is the first part of Heiken Ashi price action trading. Because price action trading is complex and price action trading is not mechanical like other systems, we need to have additional webinar concerning Heiken Ashi price action. So this month, this is Heiken Ashi. I will show you how to take trend trades, and I will show you how to go with good trend setups, how to analyze the market, and how to find a trend using Heiken Ashi principles. And in the month of June, now pay attention, in the month of June, we will be doing additional webinar, same system, same price action, Heiken Ashi system, but we will be going through more material because this is really good. Okay. Now, benefits from using Heiken Ashi in contrary, for example, to traditional candlesticks. Direction, guys. Heiken Ashi candlesticks are giving you straight direction. They are pretty much good with showing you direction, especially because they are color coded. So you can really see the true momentum and trend in the market. Now momentum, and now moment trend. Strength, they show you the strength because every Heiken Ashi has its peak and the color of the body, and you're you will very easily spot higher highs and higher lows, or lower highs or lower lows. So guys, this is one of the things which I really like to see in Heiken Ashi principles, direction and strength. And if you go with the other price action technical elements, then you can really have good entries, you can really have good complementary system to show you the trend and show you potential trade setups. Okay? Wicks. You will see how Heiken Ashi uses wicks slightly differently from traditional candlesticks. Okay? So you will see how it goes. Or, as I already said, all candlesticks are color-coded. Color-coded candles are candles which have algorithms in themselves, and by using codes within the candles themselves, they are able to show us prevailing trend and momentum. They can also be coded through different expert advisors, guys. Do not forget it. Different expert advisors. Okay? These are standard Heiken Ashi candlesticks, and we will not be using smoothed Heiken Ashi candlesticks. If you remember my previous webinars concerning Heiken Ashi, I said specifically standard Heiken Ashi candlesticks are used mostly in price action trading. Okay? That is what you need to differentiate. Price action trading usually uses standard Heiken Ashi candlesticks. Indicator-based systems usually use smoothed Heiken Ashi candlesticks. So the method which I will be showing you, I've been using it really before I started with my Camarilla MACD, and that was the form, that was one of the forms of my practical naked trading principles. And that is why I say we need to have additional webinars for these Heiken Ashi candlesticks. Basically, I need to say that Heiken Ashi candlesticks, which I prefer to use with price action, are definitely standard Heiken Ashi, not those so-called smoothed Heiken Ashi. So standard Heiken Ashi candlesticks, okay, for price action. Recently, traders started using Heiken Ashi smoothed. Yes, it smooths a lot of noise in the market, but I don't think that it can be better for price action, because these Heiken Ashi candlesticks will show you highs, lows, and wicks. Some studies which were conducted in 2013 show that Heiken Ashi is better used as smoothed, but for indicator-based systems, okay? Indicator-based, which are usually paired with a couple of MA, 4 MAs, and other additional filters. So this method which we will cover today is price action. You will see there will be few indicators. So when we trade price action, this is good for indicators. But if you compare this chart to this chart, for indicators, this is better. For price action, I prefer this, because this price clearly gives me lows where I can put the trend line. So I need to say that Heiken Ashi candlesticks are better compared to smoothed Heiken Ashi candlesticks in form of showing the price action with price action methods, and Heiken Ashi candlesticks are better for trading trend lines, trend line rejections and confluence than standard Japanese candlesticks, okay? So standard Heiken Ashi we will be using for price action trading, okay? Yen is asking, why not smooth it over the standard? Okay, Yen, this is smoothed, this is standard. When you trade price action, you cannot trade this, okay? You need to see wicks. Do you remember what I told you, and not just you, but to everyone who have been visiting my webinars? I will always telling you that you need to use wicks. These are very important in price action trading, okay? So for smoothed candlesticks, there are systems which I showed you which use smoothed, and if you like it, great. It's even better, guys, because smoothed candlesticks are used with indicators. Standard Heiken Ashi are price action. You will see I don't use any indicators besides EMAs on price action. But with Heiken Ashi, we used it with TDI indicator. We use it with a lot of other indicators, okay? No. You cannot overlap. Yen is asking, why should we not overlap smoothed on standard? Because it's not good. You will see. I will show you. Just be patient. I will show you. Okay, so let's move on to another slide. So Heiken Ashi price action. We will cut to the chase. We already lost some time on solving technical difficulties, so we need to cut to the chase. Okay. Currency pair. I will move to the chart, but you need to see this first. You can trade all currency pairs, but we use accent and we will focus on major pairs. Time frames, H1 and daily. So it's multiple time frame analysis and trading. The indicators which I use are EMA 13, which is blue, EMA 39, which is red, EMA 200, which is yellow. And we will use price action, okay? So this is different from Heiken Ashi systems, which I have been showing you before this one, because previous Heiken Ashi systems were basically Heiken Ashi indicator based systems. So we are not using indicator base now. Okay, easy to see that we are using price action systems. Okay. Goran is asking, can we trade oil? Well, Goran, I'm not sure about oil really. To be honest, I traded this and I've been using this when I traded practical naked trading. This was one of practical naked trading courses which I did back in 2000. I think it was 2010 and 11, and basically I was only trading major pairs by that time, and these specific EMAs which I have put on the chart are exactly as it goes. EMA 13, because we use 2 weeks usually of EMA. Some people prefer to use 12, some prefer to use 20 EMA for a fast moving EMA. In this price action system I put 13 EMA, okay, because I found that 13 EMA is most suitable for this system. And in the first part of Heiken Ashi price action trading, and this is the first part of the webinar, as I say for all of you, because I still see people coming in, for all of you who joined later, this is the first Heiken Ashi price action webinar. Next one, which will be additional webinar, but it will use the same system, it will be held in June, okay? So 13 EMA, 39 EMA, because I multiplied 13 with 39 with 3 to get 39 EMA, 3 times higher, and basically EMA 200, which is longer term EMA. Specifically, we will use 13 EMA with 39 EMA, the crosses of EMA, which will give us trend direction and which will give us current price momentum. Of course, with Heiken Ashi, I will describe that in the real-time chart, so that is why you need to pay close attention to this. And EMA 200, yellow EMA, which will be used for great resistance, great supports, so you can actually take counter trend opportunities. We will talk about counter trend opportunities and breakouts next time. So in the June, be sure to sign up for Heiken Ashi price action second webinar, where I will be talking about counter trend and breakout. Today we will go with the trend, okay? Today is the part where we will speak about trend trading. Okay, now the strategy is pretty much straightforward, but you need to practice it. You need to scan daily time frame for trend, okay? Because in my trading career, when I was trading Heiken Ashi practical naked trend trading principle, I used the daily time frame to give me the trend, okay? So I use daily time frame to give me the exact trend, and usually I used 1 hour entries, because usually I went for good intraday setups, okay, for good intraday setups. Now we open orders on 1 hour time frame, okay, pay close attention. So 1 hour time frame, we open orders, and daily time frame is a time frame of our choice for the analysis, okay. For trading, we use 1 hour to open orders, so daily for scanning through the trend and daily momentum, and we open orders when price retraces. We use trend lines and modified N1 to 3 inverted N1 to 3 patterns. For trend trading, we used modified N inverted N. Okay, we also will be using pivot points, but now at this particular moment, be sure to focus on finding the entries and analyzing the charts. Okay, now let me just prepare my screen for a real-time chart, but I need to go through a couple of more slides. Then definitely I will be showing you how it goes with Heiken Ashi main principles. Okay, just let me prepare the chart for you. Few seconds. Okay, great, we don't have any technical difficulties now, so everything should be fine. That is what I love to see always. Okay, the chart is prepared, we can continue. Now I will show you what is modified N and inverted N. Okay, guys, we watch blue and red EMA now. Okay, this is 1, 2, 3 N. It looks like N. Look, it looks like N, right? And this looks like inverted N. Okay, we have this, we have this. So N, 1, 2, 3. But I will show you how to use modify N. This is N, but we will not be using, we'll be using this modified pattern for entries. And we have inverted N, okay? Again, same thing. We will be using modified inverted N. So do not worry. Just pay attention and relax. Enjoy the webinar. This is usually how N is traded. And this is inverted N. 1, 2, 3, and we take breakout of the second point. But I have found out that by using modified N and modified inverted N, how I called it, you can have earlier entries which will give you better price, because we don't trade breakouts. Now we are talking, guys, about trend trades. And when you go with trend trades, you want to be early in the trade, not when breakout happens. Breakout trading is different. So again, people are coming. Guys, this is the first part of Heiken Ashi price action trading, and we will be focusing on finding trend entries. Next time, on the next Heiken Ashi price action webinar, which will be held in June, we will be strictly talking, okay, about Heiken Ashi breakout and counter trend. So modified N and modified inverted N for entries. We also use trend lines. You know what trend lines are. Those are visual representation of support and resistance in any given time frame. This price action system uses trend line a lot, and I really mean it, a lot. Okay, so you need to know how to draw trend lines. Now you see the power of these webinars. We always go through simple things, and then we go and move to more complicated things. By visiting Admiral Markets webinars and by listening to what we have to say, you know what the price is, you know what trend line is, you know which indicators to use. So this is great for a complete knowledge. We always talk about money management and those important things. And we will keep doing that, because this is your passport to success. We learn through our whole life. So we always need to adopt new things and modify old things, because market is constantly changing. Things which were good 15 years ago should be modified to suit current market conditions. So trend lines, you know what trend line is. We need at least 2 touches for a trend line to become valid. At least 2 touches, okay? Now, if we have 3 touches, as Tom DeMark says, 3 touches are very strong. 2 capture the trend, 3 confirm the trend. So the best is to have 2 or 3 touches. Now, of course, after that, the more touches the trend line has, the more powerful the move usually will be after the trend line break. Okay? Long trend lines are more important, guys, than short ones. Okay? So long trend lines are always more important than short ones. Shallow trend lines are more reliable than steep trend lines. Okay? This is how you start. Now pay close attention. This is very important. This is how you start your trading day. You need to open daily time frame. I picked Euro Yen. And you need to look for EMAs. Okay, as I said, 200 EMA is EMA for counter trend opportunities and for bounces. But we do not take bounces now at this point. As you can see, at this point, blue was above red, and we had huge daily uptrend on Euro Yen. Okay? When blue crosses red, and red is above blue, we have downtrend, which is also indicated by Heiken Ashi red candlesticks. Now, we always want to see a pullback before we make our decision, but this is daily time frame. So we just pay attention to 3 or 4 last candlesticks. If we were here at this particular red candle, I would tell you guys, this is bearish setup. The price has retraced here. This candle is red, so you need to zoom in on 1 hour time frame and watch for bearish setups. This is current day, and you can see that the price has broken through this EMA, and last 5 candlesticks or even more, we have 10 candlesticks which are bullish. So the price trend and momentum on this pair is bullish. So pay close attention. When the price is retracing, as we can see here, okay, this is retracement here, and the next candle it opens is red, we go for short trades because trend is bearish. So price retraces through to blue, red, or in between, and red is above blue, and this candle is red, so this is bearish trend. This is now bullish trend because 1, 2, 3, 4, I usually take 4 last candles. If they are same color, and indeed they're bullish, and every single of them is making higher highs, we will be looking for long entries, guys, on Euro Yen. Okay? We use current. You need to understand this concept. If it's not clear, I can repeat it again. So, if next candle, for example tomorrow, go as a bearish candle, we will be taking bearish setups. But at this particular point, you can easily see that this candle is bullish, and last 5, 6 candles are bullish, and this candle has broken through this EMA, so we take only bullish setups if we go with the trend. In this example here, we will be taking, the price has retraced, okay, and it showed red candle, so we would have been taking short entries, short. Now then we have retracement, and retracement is ideal when it's in between red and blue, somewhere in between, or it is touching the blue or it is touching the red. Okay? Yes, and when you see red candle, this is bearish day, so go for bearish setups. Bearish day, go for bearish setups. Okay? This is how it goes with the trend. Same goes here. Bullish, 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 bullish. Everything was bullish here. Then we had retracement. Then again bullish day. Then we had deeper retracement. then here is bullish day, bullish, bullish, bullish. Okay, this was the reversal of the trend and bearish setups. Okay, so if we have bearish candle next day, okay, then we will go with bearish setups at the day after it. Okay. Okay, do you understand this concept? Because I need to go with more examples how to find a trend. Okay, you understand this, right? Okay. Goran is asking, what if we have after blue candles, we have red candles? And next day we have blue candles. You need then to pay attention, Goran, and all other, you need to pay attention to EMAs. Okay? So guys, this is retracement, clearly seen here. Okay? This is bearish setup, this is bearish candle, so we go with bearish setups. Okay? This is bullish candle, okay, on that particular day. But you need to understand that this could be only a retracement with the trend. Because you have two red candles before that. I would go with short setups even on this candle. But after this day, here at this point, you have two previous blue candles. So I would go with long setups probably. Okay? You need always to pay attention to color of the candle and EMAs. Look at this. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 bullish candles. So let's say that you have traded today, Euro-Yen. Look, 10 candles, 9 candles are bullish. And of course, we would be going with bullish setups. Okay? If you go with bullish setups, you need to have, in this example, at least 3 previous days of subsequent bullish candles. So we need to have 3 bullish candles in series. And we shouldn't have any red in between. Okay? So from this day, let's say here, we could start with bullish setups. Okay? And at this day, we are sure that we can go with stronger setups because the trend is definitely confirmed. Okay? So if this is clear, I can move on. So just confirm, guys, that this is clear so that I can show you how to find the actual entries. Okay? Okay, just type OK. Okay, yes, so good. Everything is clear. Okay? Now let's move on to another slide. This is how you go with trend entries, guys. Now this is important. Okay? You need to go with 1, 2, 3 modified. How you find 1, 2, 3 modified? This is 1, this is 2, and a retracement is from point 2 to point 3. So this is retracement. Price, now pay a close attention. Price needs to touch. This is example for today, Euro-Yen bullish setup, because we had bullish analysis for Euro-Yen. Okay? So price needs to touch this level, this EMA, or go slightly below it, but blue needs to stay above red. And you draw a trend line connecting tops of Heiken Ashi. Usually after the first blue candle on 1 hour time frame, okay, you go with entry. So your entry would be here. This is 1, 2, 3. So the break of this candle, which usually shows bullish candle, is your entry. You wait for the candle to close. Okay? And it should always break this trend line, as in this example here. And another example, 1, 2, 3, this is 1, this is 2, this is 3. See, connect those tops, and you have your entry here at the close of this candle. Okay? Now let's see real-time charts, guys. So you need to see also real-time charts. Okay? So let's go with, for example, we will be using, let's see just if I put this correctly, okay? Just let's pause the screen. I need to check out that EMAs are correct. This is why, because we had technical difficulties and I didn't have the time to prepare the charts correctly, so just wait for, okay, definitely I need to change this, so please be patient 1 or 2 minutes and I will explain correct entries. Okay, just a little bit time. Okay, yellow, then we have 39, okay, and we have 13 exponential exactly. So this is it. So in this example we will go, let's say, with daily. Look at this. Now guys, this is scholastic example of trade which goes in trend direction. Okay, very, very good example of trend trade, guys. We identified the trend to be bullish because exactly at this point, look, blue went above red and we have bullish candlesticks on the chart. Bullish candlesticks on the chart. Okay, so this day previous was bullish, blue is above red, everything is very, very, very bullish. This would be our final target and possible counter trend opportunity. But until then, and we want to see trend trades, so we zoom into 1 hour time frame and we look for entries, guys. Okay, we look for entries. This is 1 hour time frame. Okay, and let's zoom in. So very easy to trade, right? We need to find 1, 2, 3 and then take trend opportunities. Now in this particular example today, we can see that there was indeed 1, 2, 3, but there was no pullback. So this was 1, 2, 3, okay, and at this point the price broke, but we wanted better pullback. Never mind, we can use previous day, which was also bullish according to daily time frame. Okay, this day was bullish, this day was bullish, today is bullish. So yesterday example, okay, 1, 2, 3, where we can find 1, 2, 3s. The best example is definitely here at this point. 1, 2, 3 here at this point and retracement to this point exactly. Okay, so once now we need to connect at least 2 tops and we have 1, 2, 3 tops here. Okay, this is why Heiken Ashi is useful, connecting the tops, or you need to have 3 tops. Okay, so indeed this can also be used as 1, 2, 3 because at this particular point you can see the price has broken and this could be your entry here at this point. Okay, another example here, 1, 2, connecting peaks, and then 1, 2, 2, 2, 2, 3. Exactly, 1, 2, 3 touches, and your entry would be here at this point. Okay. So always go for 1, 2, 3s. That is the only way. And wait for the price to break through this CMA. How I refine the trades, I usually go with 1, 2, 3 and I wait for complete retracement to EMAs. And then I usually take the first green candle. because it usually goes with modified 1, 2, 3s, okay? So this is the candle. I wouldn't wait for, very often, I wouldn't wait for complete break, because I would trade, in this case, I would trade this candle, the first red candle after the retracement. So I would open my entry here. So wait for 1, 2, 3, 1, 2, 3, and when price touches or breaks through 39 EMA, you go with first green candle, and blue still needs to be above red. If blue is below red, we don't take the trade. As in this example, we don't take any trades, okay? And wait, look at this. Always watch for counter trend patterns. This is very clear, guys. Here, this is bearish head and shoulders. You can clearly see it with Heiken Ashi. So I would definitely, I cannot find any 1, 2, 3 here. So this is 1, 2, 3. This is 1, 2, 3. This is 1, 2, 3. Okay? Now for bearish setups, it goes the same. So let's say that at this point, the day is bearish. So you can trade daily bearish setup. Where is our 1, 2, 3? Very easy to identify, guys. Okay? So 1, 2, 3, or inverted N. So here and here. And look, the first bearish candle which appears after the pullback, so it was very close to this 30. Let's see how many pips. So actually 10 pips far from 36. So this is bearish setup. Okay? Look at this. There is no red candle. So this would save you for taking the entry. Because the first red candle appeared here. This is no valid 1, 2, 3 because this is not 1, 2, 3. Okay? As the price should have showed bearish candle at this point here. Okay? At this point here. But it didn't, and look at this. EMAs are crossed. Okay? Look, inverted head and shoulders. You don't have any 1, 2, 3s. Now this is pretty much very discussable because you have a strong trend at this point and you have a big retracement. But even if you pull down your 1, 2, 3s at this point here, okay, connecting the tops here, this would be your entry. You would still be in some sort of profit, 25 pips. Okay? Although you see that blue is almost touching the red. Okay? 1, 2, 3 again. Perfect 1, 2, 3. Okay, so 1. And connecting the tops 2. And usually, this is what I did when I traded this system. I usually traded the first candle because that first candle is usually are breaking this trend line, which is easily spotted by Heiken Ashi. Very easily spotted, guys. So this is your short entry here for 40 pips. So the only rule is, guys, use 1, 2, 3s for trading. Use 1, 2, 3s for trading. And these are 1, 2, 3s, even seen better here. Okay? Look. Do you understand this concept? We are running out of time, unfortunately, but if you understand this concept, guys, just email me. I will send you this template with indicators, okay? Yes, the first candle which breaks, not at the open, this candle needs to close bearish. So the first bearish candle, 1 hour candle, which closes breaking through 2-3 point of the trend line, we take it. So it needs to break 2-3 point, okay? So this is point 1, point 2, point 3. Point 2 and 3 are broken, so we're taking the entries. Okay, once more guys. 1, 2 and 2, 3 point when it's broken by a red candle. So we are taking, look, this is broken here. So you just need to connect those bottoms here. And here we take the short entry. But you can go with the first candle after 1, 2, 3 or with a break of lower or upper trend line depending on direction. Okay? Is this clear to you? If this is clear, I will repeat it also on our next class. But this is what you should do automatically. It's very straightforward and easy. Okay? Very straightforward and easy. Look, 1, 2, 3. 1, 2, 2, 3 point break. Okay? And you just trade for starters in trend direction.